Welcome to the Budapest Eurasia Forum 2024. It is the honour of the 100-year-old Central Bank of Hungary to present this exciting multi-day event for the 5th time in our beautiful capital. Budapest is the economic, educational and cultural hub of Hungary.
Between Asia and between Europe, we need intellectual hubs. One of them is supposed to be Hungary.
One of the straight and bold aims of the Central Bank of Hungary is to focus on tightening the links between the two continents of Europe and Asia in the ever-changing world order. In recent years, the Budapest Eurasia Forum was not just a regional, but more like an international global gathering for building a cooperative and a better future.
The forum is an essential opportunity to convene participants from the East and the participants from West.
In recent years, we had participants from 29 countries, 200 speakers, and more than 40,000 people joining us personally or following live on stream.
I think Eurasia is the future development, both for Euro and Asia and for the world.
Cooperation is important, and countries must do that. And Eurasia can play a very important part in it.
The Budapest Eurasia Forum covered the most important and urgent up-and-coming problems, but also offered ideas and thematical solutions while gaining global repute. Just think about the endless opportunities these individual presentations, roundtable talks, and follow-up networking events potentially offer.
For a sustainable transition in Eurasia, you need a very strong public and private partnership.
We provide the right place for the right people from different geographical regions and diverse fields: banking and economic professionals, leading scholars, decision makers, and public investors.
What the Eurasia Forum does is bring together different cultures, different perspectives, different views.
The primary focus is to initiate global discourse and prepare the groundwork for long-lasting bilateral and multilateral partnerships, forming the basis for our sustainable and digital future. This year's theme and agenda focus on the keywords of success: talent, knowledge, technology, and capital, and the order matters. Successful economies are driven by talent, knowledge, and technology. The academic and entrepreneurial worlds need joint thinking and the pursuit of cooperative actions in cultivating and fostering both talent and new ideas.
Eurasia can create the new momentum that the world economy needs.
It's an impressive setting what Eurasia is doing over here.
We have the cause, we have the theme, and we have the goal. And we're happy to have the people here who make the Budapest Eurasia Forum. Join us at this networking-led event to become a part of a global community dedicated to making a positive impact on society and to shape our future through collaboration and innovation. The Central Bank of Hungary wishes everybody a memorable and inspirational experience. Let's have a great time in Budapest at the Budapest Eurasia Forum 2024.
Ladies and gentlemen, distinguished speakers, dear audience, it is my utmost pleasure to welcome you all at the Eurasia Forum 2024 in this winter wonderland, in this snowy day in Budapest. I hope it was a pleasant surprise for you this morning. My name is Melita Gyüdi, and I am honored to be your host today as well at the second day of the Eurasia Forum 2024. The forum is one of the flagship events of the Central Bank of Hungary, and it resonates with the MNB's efforts for a strengthened cooperation between Europe and Asia that is based on friendship, solidarity, and mutual trust. We are especially privileged to come together during the 100th anniversary of the Magyar Nemzeti Bank, the Central Bank of Hungary, a milestone that reflects a century of progress and resilience. Located in the heart of Europe, Hungary and its capital, Budapest, are well positioned to serve as an intellectual hub for experts from various countries and promote cooperation between Europe and Asia. It is within this context that we gather at the Budapest Eurasia Forum 2024 to explore this year's theme, as you heard during the video as well: keywords of success: talent, knowledge, technology, and capital, a visionary concept introduced by Governor Matolcsy. These four elements, with the right national strategy, can ensure the global success of a country and also guide us toward our goal of making Budapest a multi-hub for Eurasian cooperation. Why, yesterday we had a high-level opening ceremony, keynote speeches and panel discussions on finance, technology and geopolitics, in addition to a ceremonial book launch of the latest edition of the Eurasia volume of studies. Today's sessions will discuss the most actual topics of economy, multilateral cooperation and education. For those who missed any of yesterday's sessions or wish to revisit them, I would like to encourage you to visit the Budapest Eurasia Forum website in the upcoming days, as all the sessions will be available on demand soon. Now, it is my great pleasure to announce a keynote conversation as our opening session before the thematic panel discussions. Let me invite Mr. Richard Végh, CEO and member of the board of the Budapest Stock Exchange, as the moderator of the discussion. And I am also pleased to invite on stage Mr. Michael Sin, president of SGX Group. Mr. Sin has management responsibility for SGX's markets and platforms across asset classes. He leads SGX's global markets division, and he is the CEO for SGX's stock market, central depository, and future markets and clearinghouse. Thank you, Mr. Sin, for joining us today, and I wish you a pleasant conversation.
Good morning to everyone. I'm really glad that we have such a big audience here, even if it's quite early today. And
it's pretty impressive. I was walking over the bridge this morning thinking, I must be the only one doing this, but clearly there's more than that.
Exactly. So we will have around a 20-minute conversation. And as to give an overarching context for the discussion, let me share with you that in the last half a year, which was actually, for Hungary being the president of the European Council, competitiveness was the key word. In Europe, I think competitiveness was an issue for some time, but this year in September, the so-called Draghi report was published, which was analyzing the situation of European competitiveness and why the competitiveness of European countries and the European Union decreased in the recent decades. And one of the key messages of the report was that capital markets are not used enough by companies in Europe and also countries in Europe. So we're really fortunate to have here now today Mr. Michael Sin, who is head and president of SG's Global Markets. But as we discussed, he did a lot of things before that. He was also in academia, he was a trader, and for 14 years he's part of the management team of SG's Group. So this was a period when a lot of change happened. So I think he will be able to share with us a lot of insights and leadership experience of how SGS managed to navigate through these really challenging times. So maybe as a first question, what was in your career at Exchange the most interesting observation during these 14 years which happened in financial markets?
So I'm fairly new to the exchange world. 14 years in our business is a relative newcomer. The thing that's intrigued me is that for much of recorded history, we've seen that people who want to engage in mercantile trade, right? You want to exchange goods, you want to find the best price for your goods, you want to purchase or procure things, have found that the best mechanism for that has been centralized. A single stream, a single threaded process, whether you congregate in a marketplace, you congregate on a street. And organized exchanges such as we operate have been in place maybe 400 years, typically started by brokers. And fintech as a term, the term fintech, came about 15 years ago, 20 years ago, when we moved from a purely hardware-defined exchange on a trading floor with open outcry to using electronic trading. So it's pretty amazing to me that 15 years later, we take this fintech revolution for granted, because it really isn't a revolution. All we've done is gone from an open outcry auction mechanism for risk transfer, for price discovery, to something which is electronic, But the post-trade systems of much of this were still systems that were built many years ago. And I think one of the themes that the Hungarian Central Bank has worked on, and in fact Europe is quite advanced in thinking about, is this going to be one of these pieces of the technology and market infrastructure stack which will not change for the next 50, 100 years? Or will it get totally displaced by something new, something entirely software-defined? So if I had to sit back and say, what is my main strategic purpose in the way I run my business? When I think about future-proofing, I have to think about, are we still hardware-defined? Today, we are very hardware-defined. We're hardware-defined by fiber optic cables. We're hardware-defined by data centers. But one day, will we be fully software-defined? And in that case, winner take all. And we don't know what that means in an era of, frankly, great power contestation. What does winner take all mean in markets?
Yeah, I think technological change and digitalization is one of the huge megatrends which shapes our economies. And we will come back to that in a moment. But before maybe coming back to the competitiveness, so Singapore is a true financial hub for many international players. So for you, multilateral cooperation is probably in your DNA. So from that perspective, how do you see how markets, organized markets, and maybe specifically capital markets can add to the competitiveness of a country, of companies, of a region?
There's probably two parts to that question which are interesting to touch on. One is capital markets in the sense of stock markets, permanent capital. So what we are seeing in Singapore, in much of Asia and Europe, is that the US capital markets dominate. Because they are price formed in US dollars, this also means the US dollar dominates. So in an era of contestation and decoupling, this is something to be very aware of. So in our case, we have discovered that the largest companies that are founded in Singapore may one day decide that for their future growth, it's better to list in the US than list in Singapore. And we're seeing this in Europe. Last year it was ARM, one of the most important chip technology companies. This week it is Klarna, one of the most innovative European fintechs. And the way we have dealt with this is we've kind of delegated it upstairs to the Prime Minister to say, you have to decide whether this is a part of your supply chain that you want to risk manage. Because if you outsource the procurement of permanent private capital to the US, that's okay as long as you're comfortable with that supply chain. But other people may take a different position. So let me use some examples that we use to illustrate. There's a governmental review committee going on in Singapore. The Israel Securities Authority reports that, and Israel is the startup nation par excellence. 95% of Israeli startups end up selling at low exit valuations to foreign entities. There is no capital available within Israel for that next phase of growth where products and services are monetized sustainably, right? So everyone exits early, and all the value in some sense is captured in the US market. And that is an accommodation that may be suitable for Israel as a country. But what we found is that after 2010, when Israel was admitted to MSCI developed market status, FPI reversed even further, because the rules of indexation are, if you are an Israeli origin company listed in the US, you are still considered to be an MSCI Israel, meaning listing in the US doesn't harm you. And in fact, domestic outflow of portfolio investments increased. So this is a phenomenon that is happening in many places. The other example, I would say, the counterexample, going back to the Draghi report, is it's interesting to compare that to the Made in China plan 2025, right? So some of the technologies mentioned in the Draghi report are very similar to those identified in the Made in China 2025 plan, which was published in 2015. And back then, the idea was that with 13 key technologies, and I think we can agree that 5 of those 13, China has categorically achieved self-sufficiency and world leadership. You know, it's lithium chemistry batteries, including EVs, drones, solar power, graphene, and high-speed rail. So the state market configuration of each country determines where's the source of permanent capital. And we all have to decide, is a better source of this permanent capital from the state, or is it from capital markets? And this is a real problem for Singapore because we have many, many VCs and PEs, which mean many startups come to Singapore. But when it comes time to exit, because VCs are not permanent, PEs are not permanent, they have a target return, they have a target lifetime. Do they continue to bring value to the country? This is a value creation versus value capture concept. Europe, I think, has got, if I had to say something about Europe, having many dealings with the various European regulators, is capital markets union is something that is a political problem to solve. It is not really a practical problem. It could be done. But today, when I think about cooperating with European exchange groups, I have to think of at least, okay, in the Nordics, NASDAQ, right? In Switzerland, there's SIX, which also owns the Spanish exchange. There's LSE Group, there's Deutsche Börse, and then there's Euronext. There's not even one partner that you can think of with dealing with Europe. To touch on the second part, which is organized, so that's capital markets. Actually, almost all of our growth has been in the non-stock market part of the business. 40 years ago, the trend that we saw very clearly was dollarization. With the advent of the euro-dollar in Asia, we took a very early decision 40 years ago to create a mercantile exchange, a monetary exchange. And from that time till now, because of all the plumbing that we have built, and because of all the intermediaries that we have connected with, we have managed to build a marketplace which is the world's really only marketplace for Indian equities, Chinese currency, iron ore, freight. Not because we're better, not because we're bigger. It's because we started earlier. And in markets, I alluded to this earlier, network effects dominate, portfolio effects dominate. So the message for almost every financial hub is choose a market where you think there is a customer need, and then you really have to build on network effects and portfolio effects.
Thank you very much. It was a really, really interesting answer with a lot of very good points. Second topic is about innovation, which is also a key topic in the Draghi report as well, the innovation gap that is existing in Europe, and which is probably another very important factor for the loss of competitiveness in the last decades. So Singapore has a very robust innovation ecosystem. Can you share a few of the main elements of that and how it relates to markets and capital markets?
So we, of course, have the good fortune of being a country with some excess capital. So a lot of it's managed centrally, and there is an ability, if there's a central desire, to seed some experimentation. We go for a little bit of, so when people say technology, most people think of flying cars. I don't know why. For the last 40 years, cool technology means flying cars. Now, we know that most of what constitutes really important technology doesn't come from a standalone thing like a flying car. Technology which has an impact economically and socially is technology that's built on a stack, right? That's how particularly software-based technology works. So if you think of the largest company on earth today, NVIDIA, is it really an AI company? Of course it's not. It just generates the picks and shovels needed for the AI people. And what it makes is still recognizably what you would call a von Neumann computer, right? It's just hardware. So we in Singapore do quite a lot of this. I think we have not found the recipe to translate pure research in quantum computing into what does it mean for our ecosystem. Practically speaking, when we talk to businesses who want to go to market and want to list, a sustainable business model is very, very important. I go back to the state market configuration. If you're working with private entrepreneurs and the motive force for innovation is private returns and private gains, that's one way of doing business. If you work in a state market configuration where it's really the state or even the military that's funding your innovation, then there's a different set of incentives. So for Singapore, Our military spending is too small to drive significant amounts of usage of technology. So what we need to do is make sure that we build upon the stack that we have. And our stack is very grounded in physics and geography. So the physics of fiber optic cables is such that due to fears of interruption in fiber optic connectivity, if you look in an Asian map, it is now going around the outer ring, right? And the key hub in the outer ring is Singapore, then it heads on outside of the first island ring. This means that fiber density into Singapore is very high. This means that we have to make very difficult decisions. Do we throw away our 2030 net zero commitments and say, build lots of data centers? So right now, I have to say that we're stuck in this self-created trap where, because of our 2030 commitments, we have a moratorium on data centers, but we have very dense fiber connectivity. So that's part of the stack. Then there's a physical stack, the regulatory stack, the education stack. And on top of that, you can build, therefore, business and market infrastructure that creates value, that anchors value in your location. So to me, that is purposeful and useful technology. And it is important to understand that once something has demand, it drives new technologies. So if you look at the demand from the hyperscalers, Google, Microsoft, Amazon, because they need uninterrupted power and clean power, they will now be the next source of funds for nuclear power technology, right? It used to be Germany and France. I think it is very clear in the next 5 years, the leader in portable and safe nuclear technology will be the US, because there's hundreds of billions of dollars available from Microsoft, Amazon, Google.
We are coming back to technology again. So it is a very strong topic. So we maybe can use the remaining time for technology. How does the SGS group prepares for the changes and makes a future-proof business model for itself in relation to technological change?
The first thing we have to do is have more technologists in our business, because like most people who operate infrastructures, we tend to be system integrators. We buy software, we buy applications. So with respect to software technology, it is really important now that you learn the methods in which technology is continuously built so that you can work with people like that. So the first thing we've done is we've acquired technology businesses. And these are really interesting people to learn from, because their product is sold to banks, sold to fund managers, sold to asset owners, and those people all have standards. So you have an understanding of the minimum mistakes to create technology. Secondly, when it comes to future-proofing, moving from hardware-defined to software-defined, and this is not new, by the way. Most crypto exchanges are entirely software-defined. Distributed DeFi and most blockchain markets are fully software-defined. One of the things we have to consider is, when we move to being fully software-defined, can we be number one or number two in the space that we choose to play in? Because there is the network effect and the winner-take-all effect. So these are all things we're preparing for. I would say that when we look at whatever future configuration of a software-defined market infrastructure would be, there is a permanent need in organized society also for organized markets, organized regulated markets. And there are some key capabilities where your technology has to be good enough to survive in a software way. One is surveillance. How do you find bad actors? How do you define abnormal behavior? How do you define anomalies in the functioning of your market? So that is very clearly where a lot of these machine learning techniques come to the fore. Because today I have 60 people sitting there looking at a screen going, there's an anomaly. But in the past year and a half, it's mostly been replaced by software. Software is very good at anomaly detection, whether it's on trading behavior or even hard disk that's failing in a data center. The second one is risk management in the sense of setting margins, clearing risk, or even supervising intermediaries. So that is something that also is amenable to a significant amount of software information, but requires a lot of interaction and collaboration with other regulators. Our largest clearing members are US in origin and China in origin, right? So I need to work with the CFTC. I need to work with the CSRC. There needs to be very practiced regulatory deference, between jurisdictions if you want to be a connector of markets. And then finally, knowing your customer. Today, when we do AML, KYC, or we onboard customers, it takes an absurd amount of time. But with software, again, you can more usefully not just track the onboarding stage, but the ongoing behavior of a customer, where usually we get surges in our call center when there's a dividend or the share split, and it's always repeated behavior. We can do a much better job of doing that. So the useful software in a market infrastructure, I think, has a permanent role in organized society.
Exactly. So we have 1 minute. So can we use it for the green market instruments that you introduced for with relation to climate change and these kind of challenges?
So we do many things, maybe more than we should, with respect to climate change, or at least an attempt to bring a market solution. So our starting point is this, which is man-made climate change that we are seeing is the largest market failure in the history of humankind. Yes? Because the pollution, degradation of the earth was not priced into production. It was never priced into the cost. And the cure for this market failure is to make sure that, particularly in capital markets, there is an appropriate and distinguishable green premium for nature-positive activities and a brown discount for climate-negative activities. Today, there is zero evidence that the green premium and brown discount exists. So we are working very closely with MSCI to address the $80 trillion of index funds in the oil countries world, to introduce a methodology that is effectively cap-weighted, but creates a green premium and brown discount. And the first 3 customers are in Europe, because the sensitivity to this topic is entirely in Europe, particularly in the Nordics. I must say I have a very difficult time going to US asset owners. They completely understand the problem, but philosophically, they're return maximizing. It's not that they don't care.
Thank you very much, indeed. I think your answers were really, really insightful. It's bad that we didn't have even more time, but I think we were really happy and fortunate to have you here to answer these really, really complex questions. And I hope that some of the policymakers in Europe also listened, and we will learn from your...
Thank you for the invitation.
Thank you very much. Thank you for your audience.
Thank you very much, Mr. Vég, Mr. Sin, for this thought-provoking conversation. It was really a great start of the day. Now, ladies and gentlemen, it is time to move on to our first panel today on economy. It's titled Sustainable Prosperity, Unveiling the Pillars of Economic Success. In this panel, the speakers will discuss a new approach focusing on sustainable growth beyond traditional GDP metrics. The experts will discuss crafting an effective economic policy mix, identifying the foundational elements for a thriving economic strategy, emphasizing well-being and prosperity as crucial factors. Ultimately, the panel seeks to answer whether prioritizing GDP over well-being and environmental health, is it really the main obstacle to achieve genuine sustainability in economies? Dear audience, it is my pleasure to greet the moderator of the Fireside Chat, Mr. Barnabás VIRÁG, Deputy Governor of the Magyar Nemzeti Bank, responsible for monetary policy, financial stability and international relations. Deputy Governor, welcome. Starting the panel, we will hear a very inspiring discussion between Mr. VIRÁG and Mr. Jae-won Lee, Deputy Governor and Chief Economist of the Bank of Korea. Prior to joining the Bank of Korea, Mr. Lee was a member of committees for Korean government financial regulatory bodies, including the Financial Services Commission and the Financial Supervisory Service. Welcome, Mr. Lee. Dear two Deputy Governors, the floor is yours.
Good morning to everyone. First of all, Mr. Lee, thank you very much for accepting our invitation to the forum and to this panel. I think the situation is a little bit unique. Two deputy governors are sitting on a stage and we'll talk about sustainable economic growth. So we know well that the central bankers are those players who are focusing mainly on price stability, on financial stability. but now we will talk about sustainable economic growth and why it is important within this environment, and especially for us here in the Central Bank of Hungary, because we strongly believe that we are living in a very unique environment where the role of supply side issues, the role of megatrends will be more and more important on our economies. And without the good reading of these megatrends, there will be no chance to deliver the needed price stability, the needed financial stability in our economies. So that's why we put a lot of emphasis in our daily life on reading the megatrends, reading the supply side changes in our economies here in Hungary and over the world. So starting the conversation, I read the World Bank's last flagship report about the middle income trap released in this August, and I think all of us know well the very famous book of Why Nation Fares, written by the year's Nobel laureates in economics. In both cases, Korea has been pointed as one of the success story, one of the key example for a success model in midterm catching up in midterm economic growth. So I want to start with a general question, Deputy Governor. So could you elaborate on the unique aspects of Korea's economic growth model, and of course, what can be the key lessons for other developing countries can learn from it? So that's the first question.
First of all, thank you for having me here. And this is my first time being here in Budapest. The city looks great, and then I'm really enjoying my time here. So I just want to re-emphasize the point made by Professor Acemoglu and Professor Robinson emphasized in their book. The case of Korea is very interesting because it is a very good natural experiment that highlight the importance of economic institutions. And so they examined the economic divergence between the North Korea and South Korea to illustrate the impact of economic institution on national prosperity. So the North and the South are used to be one country, so it must be pretty homogeneous. They share the same cultural background, historical background. However, the two Koreas have experienced very different economic outcomes since their separation. So it is really important to develop inclusive economic institutions that create incentive, reward innovation, and allow everyone to participate in economic opportunities. And it also create more greater social mobility. So there must be many different elements that contribute to sustained economic growth. But in the case of Korea, I'd like to say that education and significant investment in human capital was the most crucial for knowledge accumulation and the persistent economic growth that we had over the past 60, 70 years. Right after Korean War, going back to 70 years ago, South Korea used to be one of the poorest country in the world. So most of the capital stock was destroyed, and the country did not have much natural resources, no technology, no knowledge to build on. And so we had to start from the scratch. But on the other hand, we had people. We had a good size of population. So the government then realized that maybe the only way to do it is just to, education and investment in human capital would be pretty important going forward. So we put a lot of effort on those, and so they established the education system that is, I would say, universal and inclusive, and I also think it was pretty efficient in terms of building human capital in the short amount of time. So as a result, South Korea now has if you look at the data, the highest level of average education level. So as of 2015, it was already like 10 years ago, but the average schooling year for South Korean was 14.2 years, which put the country among the highest in the world. And so a well-educated population means that more people can innovate, more people can create knowledge, and more people can solve the problems, right? So, which is essentially, it's very important for sustained growth. So, generally speaking, as I said, there must be many different things that should be important for sustained growth. But in the case of Korea, I would say if I have to pick one, education and human capital was the most crucial one.
Okay, thank you very much. So, you highlighted the importance of education. So one of the key success elements based on our Eurasia Forum in this year is also the talent and knowledge. So can you say some details about from the Korean story, how has knowledge contributed, how talent contributed to the improving quality of life in your country?
So a well-educated population means that not only you have more talent, and then so it is important to have like inclusive, like fairly universal education system, so that you don't lose any potential talent that should be everywhere, every class, every regions, every class of people, right? And at the same time, education is pretty important because it also increased the literacy rate and self-expression among the general population. So basically it contributed to the establishment of democracy and more equal society, which contributed to more inclusive economy institution. So so in addition, I also want to talk about research and development expenditure, which is another indicator of knowledge accumulation. And so we put also a lot of emphasis on research and development. And as of 2022, the ratio of R&D expenditure to GDP is above 5%, which places South Korea among the top, I think number 2 or number 3, number 1, one of them. So among the highest in the world. So, the sustained investment in R&D expenditure has driven innovation across different sectors, from electronics to biotechnology. So I talked about education and human capital and also R&D expenditure. So this combination generated a lot of, significant amount of capital stock, and also it laid the foundation for Korea's transformation from an agrarian society to a more industrialized economy. We have competitive sectors such as shipbuilding, automobiles, and electronics. And then more recently, South Korea is moving away from relying only on factories and manufacturing, and we are moving to a knowledge-driven economy utilizing information and digital technology for sustained economic growth. So, so I keep saying this, there must be many different things that might work for other countries, but in the case of Korea, based on our experience, I can say that education, human capital, and research and development worked pretty well for us, and the combination generated a significant amount of knowledge, which in turn led to sustained economic growth.
Okay, so let me step a little bit closer to the present. So nowadays we are talking about, we are living in the era of great transitions in many fields, in the field of geopolitics, in the field of demography, climate issues. There are very fast technological progress, which are disruptive in many cases. So my question is, what are the key challenges nowadays for South Korea, and what are the plans to solve these challenges?
I mean, I just talked about the positive things about the Korean economy, but it doesn't necessarily mean that we don't have any problem. We have a lot of problems. So one of them is demographic shift. This is the most important challenge that that we are facing at this point. Other things, we have other things, but that's kind of second order. So the birth rate is declining and the population is aging. And this process has been accelerating and much faster than the rest of the world. So as of 2023, South Korea's fertility rate is about 0.7, which is by far the lowest in the world. And South Korea will become a super-aged society next year, which means that over 20% of the population will be 65 years or older. So obviously this will have important implications for economic growth and fiscal sustainability. So without significant intervention, we have this growth miracle, but if we don't do anything now, economic growth could turn negative in 20-25 years. So we are introducing different measures to reverse or moderate this trend. So for example, we are introducing policies to improve work-life balance, to provide child care support and affordable housing, which is kind of not that difficult, but more difficult is creating quality jobs and promoting more balanced regional development so then we can spread out people. We figured that, why this is important? Because we figured that the high population density and high competition in Seoul metropolitan area are responsible for low marriage rate and low fertility rate. So we are preparing these different measures, and to do that, also, we are planning to establish a new government department named the Ministry of Population Strategy in order to coordinate these different comprehensive measures. And at the same time, we are preparing ourselves to adapt this new reality. For example, we are trying to increase labor participation from women and the elderly. And moreover, we are considering raising the retirement age and promote more immigration, even though this could generate some other problems. And meanwhile, the current government are trying to, trying really hard to maintain fiscal soundness for future generation and reform pension system, or the pension system, pension reform is always close to impossible. And then this was the most important challenge that we have. Then, like the rest of the world, the climate change is another important concern for us. Obviously, it has significant implication for sustainability and the quality of life. And at the same time, as the central banker, we are also concerned about its effect on inflation and the financial stability, right? And so South Korea has set an ambitious NDC target. By 2030, we plan to cut the greenhouse emission by 40% from 2018 level. This is an ambitious goal. However, this reduction is necessary to achieve our carbon neutrality by 2050. So we are trying really hard, but there are two challenges that are kind of specific to Korea. First of all, South Korea is still manufacturing-oriented economy, which makes things much more difficult. And secondly, climate technology, while relatively advanced, it's a little, somewhat behind relative to the frontier countries like the US. So we have some work to do in this dimension.
Okay, it was very interesting for me, and I was very glad to hear that in your central bank you are working, or maybe you published a paper with the title of The Path to a Sustainable Economy. Because here in the Central Bank of Hungary, in the last couple of years, we made a lot of efforts to measure and to read in a better way what a sustainable economy means. So that's why we published our book with the title of Sustainable GDP, because we strongly believe that one of the key problems towards the more sustainable future is the measurement. So we strongly believe that the current GDP statistics are not a good indicator to measure the sustainability in our life from the aspects of society, from the aspects of the climate, from the aspects of the financial development. So turning back to your paper, The Path to a Sustainable Economy. So what are the key topics are covered in the paper, and what are the key messages on your side?
So in terms of the green transition, obviously, the US central bank is the front runner. We are far behind. So it is still work in progress, and we could say a lot of different things about regarding the green transition. But in this report, we focus on climate technology, so to reduce emission and to adapt to climate change, and technology to improve energy efficiency. So, so this technology is important for the smoother green transition. Moreover, it can be a new engine or opportunity for the future economic growth. So our policy paper, we document the current situation of climate technology in Korea and identify some problems. And if possible, we can make some recommendation, policy recommendation. So here is the situation in Korea about the climate technology. So South Korea is highly active at this point in climate technology innovation. From 2011 to 2020, the country ranked third globally in climate tech patent application. So in terms of the quantity, in terms of the number of patents, we are doing great. However, if you look deeper into it, we have some problems. First of all, patents are heavily focused on certain areas, like secondary batteries and the semiconductor technology. So the coverage is not broad; it's really concentrated. Secondly, a small number of major big companies like Samsung and other big companies dominate climate tech innovation. So this means that small and medium-sized firms will have problems going forward during the green transition and when they had to respond to this trade restriction from the EU and other major countries. Thirdly, as I said, the number of patents is great, the quantity is great, but the quality is not. For example, when measured by citation, which is one measure of the quality of innovation, South Korea's climate technology falls behind some global leaders, indicating that we still have some room for improvement.
Okay. So my final question will goes to the central banker. So I started my career in the central bank in 2003, more than 20 years ago, and I remember during that time the approach of the central bank was very, very simple. We have one tool, we have one target. One target is the inflation, we have one tool, that's the interest rate policy. Since then, in the last 2 decades, I think the operation of the central banks became more and more complex and more colorful, I can say. So nowadays, I think we have more tools in our pockets and we are focusing on more impacts regarding the macroeconomic outlook. So my question is that in the Bank of Korea, when you are thinking about the monetary policy implementation, the operation of your own monetary policy toolkit, so what are those effects you are taking into account in your decisions? Do you see the impacts on the society, on the wealth distribution, after any decisions made by the central bank, or maybe the green issues? So we learned the lesson in the last couple of weeks that, okay, if we need a green transition, one of the key ingredients which will be needed, the money. So a lot of funding. So that's my general question to you as a central banker. So what are those aspects you take into account during your decision-making process?
Okay, so I have 1 minute, so it's a general question. So so we are living in this era of very fast structural shift. So we have to we cannot rely on the old playbook that we have to conduct robust monetary policy. We should update our playbook continuously. That's our job for economic sustainability. There are many issues that we should think about before we didn't think about the distribution, whereas how macro policy would affect differently different groups of people, right? So I do not think we should have additional mandate or distributional objectives explicitly, as we only have, we have more, more policy instruments than before, but still, the most important policy instrument is the interest rate, right? And the interest rate is not a good instrument to deal with other different issues, right? It might open the can of worms and Pandora box. But at the same time, I do believe that it is important we understand monetary policy or any macro policy is not neutral in its effect across different groups of people. We need to understand, we need to know distribution consequences, how a macro policy that target macro variable may affect the welfare of different people. So for example, the recent surge in global inflation has been much more costly for the low-income household because the prices of the goods and services that these households typically consume have increased even more because the price of these goods and services are much more flexible. So that means that the welfare cost of inflation is not the same for everyone, and then we might have to rethink about the relative weight between inflation and the other objective. On the other hand, research also has shown that monetary contraction, the increase in the interest rate, often hurt low-income households more than high-income households. As the poor household, they have a lot of debt, so they are typically debtor rather than the creditors. And also these households depend more heavily on labor income, which tend to decline with monetary contraction. So we have this new policy trade. So should we raise the interest rate really fast to fight against inflation or not? That's a difficult question, and we should do more research on this. So in any case, understanding this distributional consequences is important, not necessarily because we should target this distribution explicitly, but because with clear understanding, we can apply or suggest an proper policy mix. For example, we understand this if we have high inflation, if we increase the interest rates significantly, that would affect poor households more significantly. But at the same time, we understand this, so we can suggest that we need to have a more targeted policy. We can have a monetary policy that is more targeted to a certain group of people. We can suggest the government, you should do this, do that. So to have like well-defined policy mix, we have to understand what's going on in terms of not only in terms of the traditional measure, but also other objectives, including distribution and other things. I'm running out of time. I want to talk about other things, but you know. Yeah.
Okay. Thank you very much for your answer. So, thanks for coming to the panel again. I think we got a very interesting picture about the South Korean case. I also deal a lot with the economic developments, and I checked the numbers about 10 years ago, and I found in the last 17 years, globally, more than 120 countries were somewhere in the middle income level, but only less than 10 countries were able to step to the advanced level. So one country from this group is South Korea. So looking ahead, I strongly believe that using the new approach of sustainable economic developments and finding the good reactions for the current challenges are coming from the new megatrends. This number less than 10 can increase a little bit further in the coming decades, and I strongly believe Hungary can be one of those candidates who can reach the advanced level similar to the South Korean case. So thank you very much for coming, and enjoy the day of the remaining part.
Thank you very much.
Thank you very much, dear Deputy Governors, for this inspiring conversation. Now it is time to start our panel discussion on sustainable prosperity. Let me first invite the moderator of the discussion, Mr. Zsolt Kuti. Mr. Kuti is the Executive Director for Monetary Policy, Financial and Competitiveness Analysis in the Central Bank of Hungary since 2021. Welcome. Let me also welcome the discussants of the panel. First, please welcome Mr. Akiljan Baymagambetov, Deputy Governor of the National Bank of Kazakhstan. Once again, a Deputy Governor on this stage. Welcome. Prior to MBK, Mr. Bajmagambiatov served as the Chief Executive Officer of JSC Kazakhstan Deposit Insurance Fund and as the Chief Executive Officer and member of the Board of Directors of JSC National Investment Corporation. Thank you very much for being here with us today. Our second esteemed panelist is Mr. Fabrice Murtin. Mr. Murtin is Head of Research and Modeling at the Center on Wellbeing, Inclusion, Sustainability and Equal Opportunities of the Organization for Economic Cooperation and Development, the OECD. His research has focused on long-term economic development, labor market dynamics and well-being economics. Thank you very much, Mr. Murtin, for being here with us. Ladies and gentlemen, please welcome on stage Mr. Danny Quah, Lee Kwah Shing Professor in Economics and Dean at the Lee Kuan Yew School of Public Policy of the National University of Singapore. As Commissioner on the Spence-Stiglitz Commission and LSE's Global Economic Governance Commission and member of the World Bank President's Economic Advisory Panel, Mr. Quah seeks to influence global economic transformation. Welcome, Mr. Quah. And I would also like to invite Ms. Yao Wang to join us on stage. Ms. Wang is the Director General of the International Institute of Green Finance and at the Central University of Finance and Economics. She serves as the Deputy Secretary General of the Green Finance Committee of the China Society for Finance and Banking, and she is an advisor to the Green Development Committee of the Securities Association of China. Thank you very much, dear panelists. Mr. Kuti, let's hear this conversation on sustainable prosperity.
Thanks a lot for the opportunity and very happy to be here and warmly welcome all of our panelists here in Budapest, in the snowy Budapest. So the title of our panel is Sustainable Prosperity, Sustainable Growth Path. And when I prepared to this presentation or to this panel, I look back and it was very interesting to see that it has a long history when the global economic community speaks about sustainable growth. However, it has changed very differently how we approach it, what we mean by that, how the policy reaction should be optimal on this question, or even how we measure it. And if you go back to the 70s, it was very interesting to see that it was in this taxation environment, it was a key question on sustainable prosperity. How can we go out from it? Later on, when in the 90s or even in the time of GFC, it was much more about vulnerability, how the individual first, the developing or the emerging countries, and afterwards even the developed countries have to answer to the very harsh financial stability question. How can we go back to that meaning to the economy, the sustainable growth path? And in the latest, it was even getting more and more focused the environmental sustainability and societal sustainability, which is leading to even more our thinking in this case. And for us, if you think in the future, even the previous panel has mentioned that we are looking for different megatrends. We see clearly that green transition is ahead of us, aging, demographic challenges, or the new economic path regarding digitalization, or even geopolitics have providing such a new environment where we have to give new answers. And in this panel, we would like to discuss these issues, to go through in these megatrends and to look for the proper answers, proper strategical or conceptual answers for the policymakers. And there are also other two interesting questions can be arise. How can we finance it? Where is the money comes from, basically? And how can we measure it? Because it's quite clear that the previous measures give not the right answer. How can we go along to optimal growth path or sustainable growth path? And first of all, if I would like to turn to the question of climate change. It is clear that it's with us. It affects our economic and also the society as well. And my first question, maybe I turn to Mrs. Wang, that how do you see, what is the proper answer to the climate change? What is the optimal policy reaction, optimal policy path to how should we react on the green transition? What kind of challenges we can have and what kind of options, opportunities we can have?
Okay, thank you very much for having me here. I think we all noticed the theme of our forum is the keywords of success, talent, knowledge, technology, and capital. And I think for green transition, the keywords is also the same. And I would add one more, policy. So the optimal path for green transition is effective government guidance and sufficient finance support and sustained technology innovation and entrepreneurial talents and also shared public goods, knowledge goods. I think this is the optimal pathway. Of course, green transition implies many opportunities. The rising awareness for green transition will increase the demand for green services and green products, which will foster the green industries such as renewable energy, green transportation, and green construction, green building. So there's many investment opportunities, and which will also lead a new economic growth and employment. And of course, green finance also faced with many challenges. The first one, I think, is the lack of the awareness and the capacity, especially in emerging countries. The stakeholders, including governments, financial institutions, and also enterprises, they are not so aware of green transition. And even if they have the awareness, they do not know how to promote it. So they lack the capacity. And secondly, I think there's challenges is insufficient financial support. Although now we already have some, green loans, green bonds, but if you figure out the proportion of the green loan, green bond is still not so high. And also other financial instruments, just like green insurance, green funds, green trust, and this financial instruments is still not so many. And I think the fourth is the third challenges is about the technology. If without subsidy, mainly, green technology actually is very costly. So, and also we should keep in mind that the technology will always be replaced by more low carbon technology, and the investment in green and low carbon technology may fail. And the last challenge, I think, a greening process always accompanied by just a transition problem, such as unemployment. So I will stop here. Thank you.
Good. It was very interesting to see from two aspects of view, maybe from a prospect aspect from an individual country, and how do you see from an aspect of from the OECD, from a multilateral institution. So for me, first I would turn with my question to you. How do you in Kazakhstan try to answer this question? Because it's a tough answer.
It's quite tough question for Kazakhstan. You can imagine that Kazakhstan, it's like a challenge, a huge challenge for us. Kazakhstan is known as an oil and gas producer. We have some coal energy plants, which we take from the Soviet Union, but also the hydro. But however, Kazakhstan is a part of this sustainable development movement, and we as a country announced our intention to reach a carbon neutrality up to the 2060 and to reduce the greenhouse gas emission. And we are doing some proper steps in that direction. Government adopted the green taxonomy in 2021. We also implement the emission trading system in Kazakhstan. And for example, from the energy producing side, recently we have nationwide referendum about the building the nuclear power plant, and the whole population was voted for that, and it's really big contribution to this green energy, and also a lot of different projects, for example, in energy to produce it in renewable with the wind or solar. It's also we have our government have a pipeline of this project, and we see that these steps help us to go more in the green side. Also, like from the financial regulator sides, we as a national bank and our financial regulation authority, we joined the NGFS, the network for central banks and financial regulator for green finance. We do some steps on ESG already, some part of reporting on our local stock exchange. And we see that these green loans and green bonds already take a place in our life, as we heard from Chinese. Maybe the proportion is still low, but there is no any, for example, tax incentives for that yet, but maybe in future it's appear and it's helped to increase. And sometimes maybe it's not incentives to mark your loan or bond like in a green, but it's going for the real green purposes. But we definitely doing steps in that direction also.
Thank you. And I would turn to Mr. Martin. Do you see good examples in your work or in case of the OECD, how to make the optimal way to green transition?
Yes, absolutely. First of all, thank you for your kind invitation. I think that a relevant starting point in this discussion is to state that the economic damages from global warming have been vastly underestimated by a ratio of 2 or 3. I strongly recommend to the audience to read this paper by Coates, Leverman, and Vance, published in Nature last April. They state that GDP will be reduced by as much as 20% in South Asia, Southeast Asia, Africa by 2050 compared to a scenario without global warming. North America, Europe will incur a loss of GDP of 10%. So those numbers are huge, and they are actually 6 times larger than the mitigation costs that would be necessary to limit global warming to plus 2 degrees. So from this standpoint, it would be economically irrational not to invest massively as soon as possible into mitigation policies. Still, we're very far from there. Today, the effective carbon rates are on average equal to 20 euros among the 80 countries that were surveyed in the latest OECD report. And those prices are widely heterogeneous across countries. They can be negative in some emerging economies that subsidize fossil fuel, and it goes as high as 140 euros in Switzerland. Now, where do we need to be by 2050? All countries need to become like Switzerland. This is what the optimal analysis, the quantitative models say. The Nordhaus DICE model, or its version with inequality that I'm using with Mark Fleurbe and co-authors. We need to be in the range of $100 and $200 by 2050, depending on the scenario. Why this has not happened so far? Obviously, due to political difficulties. Within countries, we know that implementing a carbon tax can be regressive and hence trigger some political resistance by the population. We, of course, were all shocked by the Yellow Vest movement in France some years ago. This is where the design of the carbon tax is very important. You need to recycle the revenues from the carbon tax, use part of it to redistribute directly to poor households, and perhaps use the other part to finance adaptation, public goods for better adaptation. And of course, the white elephant in the room is global coordination in the system of carbon prices across countries. The between country issue is also very important. So the economists used to say that, to achieve cost efficiency, we need to have the same carbon price across countries in order to have the minimum global burden in climate change mitigation. But this is obviously politically unfeasible because of differential historical responsibility and also differential states of development. So we need to explore some second-best policy scenarios. And this is exactly what we are doing together with the economics department and the environment department. So we will issue some policy scenarios, and I'm happy to circulate those papers to those interested.
Thank you. It was these numbers are very strong that you have mentioned, which affect, climate change affect our economic growth. But it's also interesting to see that it's also an aspect where societies will be affected. And the second megatrend that I would like to highlight it is demography and society stability. It's quite clear that if we don't have stability in our society, we will not go along our economic growth path. However, in this regard, the demography will alter very strongly this landscape. So if I have a look on the United Nations forecasted 2100, it's very sad to see that in most part of the world the population will decrease. In some regions very significantly, expect Africa and some part of South Asia. And also the aging will be a crucial issue in this regard. So all of these trends will affect our social stability. What kind of policies should we foster in order to, or use to foster the demographic challenges, or to change these very radical changes, and what kind of impact it can have on the society? This is my second question. Maybe I would turn back first again to Kazakhstan and after to Mr. Barnabás.
Thank you. Demographic policy, it's maybe not so typical topic for central banker, but I'm trying to answer. And when I prepared to the discussion, I prepared 2 quotes from some international organizations' report on that topic. First, it's about according to the International Labour Organization, globally, the rate of population growth is slowing, but the projected increase of more than 2 billion people over the next 4 decades remain a major challenge. The number of people aged 60 and over is growing faster than any other age group, and it's set to almost triple by 2050. Population aging impacts the economy through potential labor shortages, skill shortages, innovation, and fiscal pressures from rising social security payments. It gives us some thought-provoking that it maybe central bank also should thinking about that. And another one about the maybe some policy mix in that area. According to UN World Population Policies 2021, among they, as I understand, they review 81 countries with a low fertility during 5 years pre-pandemic, 2015-2019, and the common measure by the government was paid or unpaid maternity leave with job security. And beyond that, the 4 most commonly adopted measures were first, publicly subsidized childcare. It's 88% of countries. Child or family allowances, 78%. Paid on unpaid parental leave, 73%, and the same, but with the job security, also 73%. And in case we come to Kazakhstan, we see maybe most of these measures in a place. To be honest, in Kazakhstan, population is growing, but we have some maybe in the beginning of, in the end of 1990s and the beginning of 2000s, it was like a very stable population due to some significant outflow of population from Kazakhstan. At that time, it was a population about maybe less than 15 million. In 2000, it was, as I said, To be honest, it's like an actual number. It's 14.9 million people. In 2009, we add 1 million. We became 16 million people. And after that, every 4 years, we add 1 more million people. And for example, for 2013, 17 million, 2017, 18 million, 2021, 19 million, and now in 3 years later, 20 million people. We have these all measures, maternity leave with the job security. It's paid for first 1.5 year and unpaid up to the 3 years. We have this childcare allowance. When child is born, the government pay for his mother or her mother some allowances. And one recently, maybe some specific for Kazakhstan, we have a national oil fund which collect revenues from the oil sector. It's mainly like a fund for stabilization of budget and for future generation. And President last year announced the program National Fund for Kids. What it means? It means that half of investment return of this national fund will be distributed through the all kids in age under the 18. It means the main purpose is some kind of contribution to the future educational or for the housing. However, it's not enough amount, but it's given for the whole population some more inclusive feeling about this fund, because before maybe it was some thought that it's something which government use for some budget problem, etc., but now really any family in a country once a year receive a notification from the government that you have an account and your child has some revenue from the government, from this national oil fund. It also creates some feeling that government care about it. And maybe it's also help us to be growing in population country.
It's, I guess your situation is much better than in Hungary. Just to reflect to your question, why central banks have to deal with it for a very extended period, we didn't take care. And not take care, but we were just analyzing the story, but didn't have very special focus. But unfortunately, Hungary's population is already declining for 40 years. We were one of the first countries where the decline was started. And by now, these are the first years where not only the population, but the number of employees has started to decrease. So every year from the Hungarian employment market, this 1 percentage point of the total employment will go out basically from the employment. And it's already have a very strong impact on our economic structure and also the inflation as well. So therefore, already in central bank, we have to focus on this issue quite seriously. So it was very interesting to see that also you have very strong measures on this. And also the second what I want to mention, that here in Hungary, we also have for a decade already very tough measures, very strong measures in order to change the demography. And we have partly successes, but we have already see the limits of this type of approach, that how can we boost demographic. And I guess we have to turn also in our mindset. So it's a very actual question here in Hungary. And if I would turn in this question to Mr. Merton, that in your research you focus on well-being oriented policies. How do you see these questions? How the optimal reaction to this demographic challenges?
Right. To address population aging and ensure social stability, we need to have a whole of government approach. We need to have a policy mix. To give an example, if you want to limit the shrinkage of your workforce by extending the legal age of retirement, you need to have a healthy workforce at old age. Hence, you need to invest into health policies, in particular in prevention policies. If you want to foster women labor force participation, you need to invest into childcare and family benefits. If you want to ensure the transition of low-skilled workers from brown to green sectors, you need to put in place ambitious active labor market policies. Of course, you need also to have fiscal soundness, as was highlighted several times, because the public expenditures in healthcare will increase by 10 percentage points by 2050. This is huge. And on top of that, governments will need to finance the green transition, and defense budgets are also on the rise. So that's why we're saying that all public expenditures should be assessed in the face of their cost efficiency. And for that, we provide some tools to analyze the efficiency of public spending, especially in the area of social investments. Of course, when you have fewer workers, you also want them to be more productive. Hence, you need to invest into growth policies, structural reforms, competition, trade policy, R&D, artificial intelligence, and so on and so forth. And it also depends, if you want to ensure social stability, it also depends what kind of growth you want to put in place. You ultimately want growth to be inclusive, to expand the opportunities of all population groups in society. And this is a huge benefit because enhanced opportunities and well-being feedback and foster economic growth. So when you do that, you manage to trigger a virtuous cycle between growth and well-being, what we call an economy of well-being. Of course, from time to time, you know, this positive feedback loop breaks down because people lose their job or become sick, so the virtuous feedback loop is broken. And this is the reason why social protection is especially important to restore the positive dynamics between inclusive growth and well-being. I will finish by mentioning the role of institutions. I was highlighted yesterday, and today I have set up an international program on the measurement and analysis of the determinants of trust. We also need trust in others and trust in institutions. And trust in institutions doesn't depend only on the popularity of the main political leader. There are also structural determinants, like integrity of high-level officials, the responsiveness of governments to citizen queries, and the quality of public services. I think that in that regard, Singapore is a very telling example.
Thanks a lot. My understanding is that in case of demography, it's much more complex approach, but we need not only focusing on family, direct family transfers, but to understand all the other policy aspect and to boost also the remaining part of social policies as well. And I would like to turn now to our third megatrend, third topic, basically geopolitics. And I would turn to Mr. Kwa in this question, that it was clear that in the last, even there was always geopolitical changes in the global world order, but in the last, let's say 40 years, the game of the rules didn't change significantly. But now we can see that this landscape is already changing much more rapidly, or at least have new tensions, new turning points. And my question is that in this environment where such a change can affect the economic structure of a country or industries, let's say, where seem to be the key focus point in development or the sustainable path, turn to much more burden on an economy. Let's say in case of Hungary, now we are suffering in our automotive sector. So what are the optimal reaction of more economic policies to these very significant geopolitical changes?
Thank you, Moderator. Your question is about how we, whether it's Hungary or Singapore or other nations, how we need to behave in a landscape that's changing the way that it is because of geopolitics. you know, when you asked that question, I was sitting here thinking how envious I am of my fellow panelists. We're talking about things that are very concrete. Green finance is changing my bonds portfolio, demography, old people, young people, environmental change. These are things that are actually tangible. Whereas when it comes to geopolitics, we're often left with this nebulous idea. There are great powers out there, they're doing things, and then they're doing things that affect us. And the line between the actions that's being undertaken there in geopolitics and our well-being is not always clear. So in answering your question, I thought, you know, one picture that many of us have about geopolitics is we think of the world as some chessboard, and the great powers, the United States of the world, China's, Russia's of the world, are moving pieces around on this chessboard. And we, the poor rest of the world, Hungary, Singapore, are having to live with that. How do we navigate that? Sometimes that comes to us in the form of, well, you know, when Trump is coming back, he's going to put on sanctions and tariffs, and that's going to interrupt trade. And that will be bad for us. Well, at least for some of us. And so we're left with this picture that geopolitics is this manipulation of things outside us, and we're constantly having to respond. Right? So in answering your question, I want to suggest that what we need to do is more than just passively respond. There's a thinking in geopolitics that the great powers do what they will, and the rest of us suffer what we must. And a thinking that says we are trying to respond to what the great powers do succumbs to that. And I think that the way the world is now that you described so well, Moderator, is a world where we need to take agency. We need to be able to exercise influence and not let geopolitics roll over us. But that's a tricky thing to ask, because I can imagine my nation setting up systems like the one that Michael described so vividly this morning to account for green finance. I can imagine, as my colleagues here have described, systems that help take care of the young and the old as demography changes. How do we, small nations, deal with great powers moving us around like pieces on a chessboard? So the answer to your question is, how do we keep our economic prosperity, our agency, our independence as a sovereign nation when we are small, right? And the great powers are doing what they will. Hungary, so in order to try and ground this, I look out the window. Hungary is 10 million people. It's getting old, but it's 10 million people. Its GDP is about just under $250 billion, $250 billion. It trades 150% of GDP. Every dollar of GDP that you generate out there, 1.5 goes through outside national borders. Singapore is even smaller. It's only 4 million people. Its GDP is under $500 billion. It trades 300% of GDP. Every dollar that we generate in Singapore, $3 flows through. So for us, for you, understanding this geopolitical conundrum is existential. It's hugely important. It's not just we have to sit back and let the great powers do what they will, and then we passively respond. So the question is, how do we do that? Right? What can we do? For us, geopolitics is more than just tariffs and sanctions. For us who are small nations, our people cannot diversify the way that a large nation can. Our people, whether it's Hungary or Singapore, will always make more of what our people can and less of what our people need. So being able to engage with the world is hugely important. It is up to us to take a step forward. So I suggest that as the world of geopolitics continues to shift, as we try to understand what Trump is doing, we don't think of it as just something happening out there, whether it's the exchange of ICBMs between Ukraine and Russia, the tragedy that's unfolding in Israel and Gaza, or even the dangers of what's happening in the Taiwan Straits or South China Sea. Is something very real, and we need to step forward. So here's how I think we can step forward. We're small nations. It is ridiculous for us to think about our coming onto the geopolitical stage and standing toe-to-toe militarily against what a great power wants. We have to be smart in our geopolitics. And our geopolitics has to be one that tries to induce the great powers who are caught in gridlock. We need to work on helping release them from that gridlock. We need to help them do what they want to do, not try and force them to take action that they don't want to. So let me end by giving an example. In answering your question, how do we preserve our economic prosperity as small nations, whether we're Hungary or Switzerland or Singapore or anywhere else, we're not the great powers, how do we manage geopolitics? I think what we need to do to manage geopolitics is to figure out how to get great powers to cooperate even when they don't want to cooperate. So let me give the concrete example. Electric vehicles. Electric vehicles, together with lithium-ion batteries, solar panels, wind turbines, are this wonderful, cool, trendy technology. For most of humanity's existence, we have tried to keep our quality of life by using technology. Unfortunately, that technology is also burning our planet to a crisp. Finally, we've got a technology that is cool and green. What has geopolitics done with that? Instead of encouraging ever greater production of this technology so that all of the world can benefit, geopolitics has now gotten to a point where the United States is trying to tell China what it is not allowed to do with the electric vehicles that it's producing. It's trying to sanction and tariff other parts of the world that are efficient at producing EVs. This is a terrible situation. Gridlock is an example of geopolitics at work. What can we do? Well, we can make it awkward for the United States to continue to behave in this way. We can say to the United States, if you believe that when China subsidizes electric vehicles, you are disadvantaged, you subsidize your electric vehicles too. Right? They would say, that's great, we can level the playing field, we'd like to do that. And by doing this, by all nations that are producing electric vehicles subsidizing their EV industry, what's the end result? Even though they are trying to do this in competition, geopolitical competition with one another, the end result is a higher production of electric vehicles worldwide, which is good for the global south, it's good for Hungary, it's good for Singapore, it's good for all nations that are not participating in the manufacture of this. By taking the actions that we have, that I've described to you, we can jujitsu geopolitics into a form where the great powers inadvertently cooperate with one another. What we need to do, whether we're Hungary or Singapore, is to be looking for opportunities in geopolitics where we can induce inadvertent cooperation, where if we didn't, we would only see gridlock and geopolitical rivalry. I think that's a mission for us, as vital a mission as constructing green finance portfolios, as vital a mission as for managing the demographic transition. Third nations like us, small nations in the world, need to be proactive geopolitically. So my answer to your question, how do we manage this geopolitics, is don't sit back and take it. Let's go out there, even as small nations, and try and manage the great powers to do the right thing, not by preventing them from taking the actions that they want to, but by helping them do what they really would like to, which is produce more EVs. Thank you.
Thank you. I was very happy to hear it. You know, in Hungary, we tried to do also some similar approach in case of EVs. We have a city called Debrecen where Western car makers, BMW will have a automotive plant, and on the other side of the road, the CATL are building the battery production plant there. And I guess it can be a mutual, both cooperative or such a cooperation which can be fruitful for both sides. I guess it can be an answer for that. So I'm very happy to hear that.
Can I just very quickly modify? when I say we induce inadvertent cooperation, I think that given the way geopolitical rivalry is in the world now, it is a lost cause to try and get nations to actually explicitly agree to collaborate with one another. What we must do is to induce them inadvertently to cooperate, even though they think they're not doing so. That is the trick. It is not for small nations like yours or mine to stand up to a great power across each other from a battlefield and challenge the great power to do something they don't want to do. It is for us instead to induce them along a pathway that actually they end up doing what we want them to do, but they're actually serving their own self-interest. And there's a good intellectual tradition for doing this. Adam Smith, 250 years ago, said that it is not due to the goodwill of the butcher, brewer, and baker that they put dinner on our table. It is not that we go out there and we sign a collaboration agreement with them, but it is from their paying attention to their self-interest. We need to, as economists, as social scientists in small nations, not great powers, apply ourselves to thinking how we exercise that intuition to get geopolitics, even with great power rivalry, to once again work for the well-being of the world. If we don't do that, our planet is going to burn to a crisp. We will see wars break out even more. But what we can do is to actually exercise agency and try and take control of great power geopolitics, even though we are not ourselves great powers.
Thanks a lot. It was very interesting to me. If my conclusion, if you have a cooperation at individual or corporate level or at business level, then it's much harder for the politics to be rivalry if you have the strong relationship among your players. So thanks for that. It was very interesting. But time is rushing, so I would turn to our 4 megatrends. Maybe first to Mrs. Wang. Basically, digitalization and competitiveness. It was very clear that in the previous decade, the room for demand-side policies, monetary policy or fiscal policy was significantly larger than in this decade. Now it's we feel also in monetary policy the room for maneuver is much more narrow, and I guess fiscal policies feel the same, not only here in Hungary but everywhere. And my question is that in such an environment where the role of structural policies get even more and more important, what can the individual countries or governments or institutions can do for boosting digitalization of the economy and competitiveness policies, and also what kind of good practices do you see?
Actually, I'm not a professional on digital economy, but I have one point that is for the policy. I suggest that digital industry development policy and also green transition should be synergistic. Yeah, from one hand, for the digital industry development should also lead a greening way. Yeah, we all know that, actually, for example, in China, there's a lot of big data center construction. And we all know that this data center are highly energy consumption. So how to greening that? So China have a policy that we should to set up a green data center, and also the manufacturing of electronic information products should also greening that, and digital industry, digital technology enterprises also should lead a green and low carbon way. And from another hand, actually, for those digital technologies such as AI, blockchain, cloud accounting, and Internet of Things. So this technology actually can enable traditional industry to do green transition, such as for the steel, mining, power, and petrochemical, and also agriculture, smart cities construction. This industry are all need if digital technology can help to improve their efficiency and also lower the cost. So it's also very good to enable this traditional industry to do the green transition. Yes.
Thank you. And maybe I would turn to Mr. Baumgarten that in the case of a central bank, how do you see the role of, or as a central banker, how do you see the role of digitalization, or what kind of focus do you put in your daily operation in this issue?
I can say that we as a central bank definitely working on that, but maybe more wide picture in Kazakhstan. We believe that digital public infrastructure is a crucial cornerstone for digitalizing your economy. It enables seamless interaction between government, businesses, and citizens, and it helps to really digitalize the economy. Kazakhstan is a very good example, and we have a mature GovTech system, such as government databases, registries, digital ID, and with when maybe pandemic also help, we use some open data approach, and now not only the government application, but also, for example, financial sector became a enabler and maybe locomotive for these changes. You can imagine that, for example, now banking applications became a super app. It's not only some kind of financial tool. It gives you possibility, for example, to buy or sell car with registration in government databases. It's registered when child is born. You can also register your marriage through the banking application. It's amazing. Sometimes somebody says it's something may be wrong, but really, yeah, not only the government GovTech but also using this. We have some so-called super services. For example, when child is born, this registry making automatically, and not only the updating the database, it's also some social transfers for a mother, and all these measures done automatically without your manual interaction with the system. And it's all of this happened due to this digital public infrastructure. And we as a central bank also participating in that. We creating and building so-called national digital financial infrastructure, which allowed we not compete with the commercial banks for their relationship with the customers, but we try to build a common infrastructure to be equally distanced from the all market participants and give this preferential access not only for big market players, which is you should invest a lot, but only for also for the small and medium size banks to enjoy this digitalization and to provide some public digital services to their clients. We use the fastest payments, programmable money through the CBDC. We launch our central bank digital currency, digital tenge, and we use a lot of the different programmable features of that. For example, for VAT, traceable reimbursement, for the traceable government purchase, and etc. A lot of different things. But you should also recognize that with these digitalizations, it's new challenges, fraud. It's some part of this story. And this year in July, we also launched an anti-fraud center, and we already, for example, blocked more than 600 million tenge, more than $1 million US, these suspicious transactions, and it's also helping us to moving more quickly in that direction. And maybe also 1 month ago, during the IMF meeting, it was like some independent study making one of the American think tanks about some lessons you can learn from Kazakhstan experience on developing digital public infrastructure. And I also participate in that panel. It was interesting to hear about your success from some independent research, and really it was amazing. And maybe three things you can do to enable the digitalization of your economy. Invest in interoperability systems like in a digital ID. It's very crucial. And payment infrastructure. Second, prioritize collaboration between public and private sectors. It helps us a lot because just government technology cannot reach each citizen. And third, focus on consumer-centric models. For example, when we build in this national digital financial infrastructure, we try to come back and to return the power from the banks to the consumer. And these three things help us to digitalize the economy.
It was very interesting to hear, and even if a full panel could be well about your experiences, because I guess it's very fruitful what we have heard. We have very few time, but I'm very interesting in the last question. Maybe I jumped the finance question. There was another panel about it. So just how to measure the measurement question. We have GDP for an extended period, but we also see the bottleneck of this measurement approach. And I would turn to Mr. Merton. How do you see what kind of other indicators should we use in order to measure our way on the sustainable economic growth path?
Right. Thank you very much for this question. So following the Stiglitz-Sen-Fitoussi Commission 20 years ago, we have defined well-being in a multidimensional way. These are all the aspects that matter in the life of people. Their income, education, health, housing quality, environmental quality, and so on and so forth. So to measure well-being, actually, we have put in place dashboards of indicators that measure average outcomes in each of those dimensions, that also pay attention to inequality within those dimensions. The problem with dashboards is that they are not informative about policy trade-offs across dimensions. Suppose that you want to invest into public education or public spending, you will need to tax households, so reduce their income. This is a logical policy trade-off. This is why we have put forward aggregate indices. The problem with aggregate indices is a selection of the weights on the various components of the aggregate index. The United Nations have done it in a statistical way. For the Human Development Index, it's not scientifically sound. You want to use weights that reflect people preferences, their willingness to pay, to increase or decrease each of the components. So the Beyond GDP index that we have created is actually equal to income minus monetized unemployment plus monetized life expectancy minus a penalty for inequality. And the value of those weights is very interesting. So we found that 1 year of life expectancy is worth 6% of income. So when you lose 1 year of life expectancy during the COVID crisis in 1 year, it's equivalent to an economic recession of 6% in 1 year, in welfare terms, you see. And when you look at the change of this welfare metric over the 20th century, you find out that the contribution of progress in longevity has been as important as a contribution of income. So you see, economic growth and progress in health should stand at the same level from a welfare perspective. Unemployment, 1 percentage point of unemployment is 2% of income. So when Spain records an increase in unemployment by 10 percentage points in the course of the euro crisis, it's equivalent to an economic catastrophe of minus 20%. And this is not reflected into the GDP figure. This is only reflected into this kind of beyond GDP figures. Why is this useful for the design of good policies? It is because we are now into the business of diffusing those welfare metrics into your models. the macro models used by the central banks, by the Treasury, by the Ministry of Social Affairs, into the micro simulation models. The Deputy Governor Lee mentioned the distributional impact analysis. So we put welfare metrics into those micro simulation models. We have done consulting for a large number of European countries, Italy, Slovenia, Slovakia, Belgium, Spain, and we're also ready to support your countries if you have the willingness to adopt this welfare technology.
Thank you. Thanks a lot. It was very interesting, these numbers. And we are running out of time, but I would like to give the chance to any of you if you would like to add to this question, to any other question, looking around. Mr. Margaret?
Maybe some small intervention in the topic. I completely agree that GDP it's not cover everything, but maybe some central banker view, maybe more traditional than some discussions was between two deputy governors. I believe that central bank, which fight with the inflation, it's our best way to contribute the social equality. That high inflation is a tax for poverty. And fighting with and ensuring the low and stable inflation is a cornerstone for a sustainable economic growth, and it helps us to prevent or to save the purchase power, not only the savings of rich people, but also the purchase power of the labor incomes of the ordinary people, and that help to reduce the social inequality. And I believe that in that case, central banks doing their primary job, also it's our contribution for well-being.
I can only just fully agree. I guess after the 70s, the world has somehow forget the role of inflation. We were quite a comfortable environment, and this decade or this new wave teaches us again how important inflation is and fight against inflation, because it can affect not only the real wages, but also the cautiousness of the household sector, but also investment, and also at the end of the day, the economic path that we are running on. So,
yes. Add to the list of indicators that we might build. As you might have guessed, I want to be concerned about the global economy, the collection of nations, not necessarily just any one. And I also want us to be thinking about ways in which we measure platforms that will continue for sustainable growth. So I might add to this list of indicators some measure of the degree of multilateralism that's healthy in the world, and the degree to which a rules-based order still allows small states like ours to see a way ahead for how they can grow, not to be sort of subservient to a process of alignment with one great power or the other. So the health of the global economy, I think, needs to enter the way in which we measure what each nation is doing.
Thanks a lot. And at the end, I would like to make some self-marketing. Sorry for that. Barnabás has already mentioned that last year we published the book about sustainable growth, GDP. And in this book, we developed 2 different indexes in order to measure. I don't want to go into the detail, but it's worth to see because it's a very interesting list of countries. And at the end, I would like to thank you all of this panel and this discussion. I hope that our participants has enjoyed also similar than me, and I very happy to hear all of your thoughts. Thanks a lot.
Thank you very much, Mr. Kuti, and dear participants, for this valuable discussion. Now, ladies and gentlemen, let's take a short coffee break. Then we will be back with the panel discussion on multilateral cooperation shortly. Thank you very much.
response to global challenges. In recognizing our shared destiny, we must promote peace, development, and cooperation. Addressing common challenges and fulfilling our shared responsibilities. Join us at the Pu'ao Forum for Asia Annual Conference 2024.
Think tanks, a symbol of national soft power, are now playing a vital role in decision-making across the globe. China's think tanks have entered a new development stage as a result of continuing reform and opening up. In the 1980s, the wave of reform and opening up swept across China, driving the nation along the path to modernization. To further liberalize thoughts and press ahead with reform and opening up, the nation was in great need of intellectual support and international perspectives. In February 1989, China Development Institute was jointly founded by 116 government officials, economists, and entrepreneurs. Right from the start, CDI positioned itself as a policy research institution based in Shenzhen, China, but with a global perspective. CDI convinced global talents to deliver fact-based research and consulting services to promote China's reform and opening up. In 1992, the then Chinese Premier Li Peng instructed CDI to build a research institute unlike any other public institution in the spirit of reform. As a think tank, CDI has kept exploring operation models and has finally shaped a business framework which integrates three pillars of basic research, policy analysis and consulting services on one hand, and combined government-assigned tasks, independent research projects, and client-funded consultations on the other. Market-oriented consultation contributes 80% of its revenue. CDI brings together a team of globally minded professionals. Since 2015, CDI has been designated as one of the China's leading think tanks in the pilot project of the Chinese central government. It provides policy research that adopts a proactive and strategic approach. CDI's research focuses on the 5 areas: open economy and innovation-driven development, with topics including the Belt and Road Initiative, businesses going out strategy, global financial centers, new economy, etc. Regional economy and regional development, with topics including the Guangdong, Hong Kong, Macau, Greater Bay Area, special economic zones, industrial parks, etc. Industrial policies and industrial development, with topics including commerce, logistics and supply chain management, marine economy, financial services, renewable energy, biotech, pharmaceuticals, etc. Urbanization and urban development, with topics including urbanization-related public policies, urban development strategy, urban planning, urban governance, etc. Business strategies and investment decision-making, with topics including business development strategy, investment decisions, etc. Since its inception, CDI has undertaken research projects from various ministries and commissions of China and compiled policy recommendations to meet the nation's needs for strategic research. Its policy research is also a vital resource for Chinese government at different levels and private sector in and outside China. CDI is dedicated to international cooperation through personnel exchanges, academic conferences, and research collaborations. It has built partnerships with many organizations around the globe, including think tanks, research institutes, and international organizations. Leveraging its strength in research, CDI has also run a series of academic events on domestic and international issues of debate. By pulling critical insights from across the sectors and developing policy recommendations, it has successfully established presence at home and abroad. CDI disseminates its research findings and policy insights in academic journals, on its Chinese and English websites, and through media outreach. It is a key founding member of the Shenzhen Soft Science Development Foundation and Shenzhen Mahong Foundation for Economic Improvement Research. It has founded China Opening Herald, a journal of economics. CDI serves as a postdoctoral research center for applied economics and a training base for talents in South China. It also holds National Class A qualification certificate for engineering consulting.
Look at the future down the road. China's reform and development process is going to be a long process. There are going to be many new issues, new problems, new conflicts we would like to deal with. And we need to make more effort to have a thorough study and to make more policy recommendations for the various levels of government and to make more development recommendations for the corporate sectors.
As a pioneer of independent think tanks in China, CDI will forge ahead on the path of promoting China's reform and opening up and contributing its insights into the mutual understanding between China and the world's other economies.